Good morning, America! Welcome to another recap for the week ending February 16th, 2024. Let's start by going over a few statistics of the TQQQ for this past week. The TQQQ closed at 57.41 for a weekly loss of minus 4.75%, a monthly gain of 11.35%, and a year-to-date gain of 13.23%. Last week, we saw how the CPI report negatively affected the TQQQ on Tuesday, while the PPI numbers on Friday did the same. In addition, retail sales have been at the lowest since last year. As we check out the CNN Fear and Greed Index, once again, it is at extreme greed. As we look at the TQQQ yearly chart, we are looking to see if the 20-day SMA pullback support can hold. If not, looking to get into the trade at the 50-day SMA, which is our uptrend defense line. An important thing to remember is to let the market act while we react. This week will be a short trading week due to President's Day on Monday, which only gives us 4 trading days. There's no market economic news that will move the market this week, except for Nvidia's earnings this Wednesday after the closing bell. Right now, the market is on thin ice. The options market has already priced in a $85 move for Nvidia. As a result of this, expect high volatility this week. As long as the 20-day SMA holds, we are in an upward trend. If the price drops below the 20 SMA, we will be watching the 50 SMA closely to see if new buyers step in. This is applicable for Nvidia as well as TQQQ. On a side note, election years can have various effects on the stock market due to the uncertainty and potential policy changes associated with the transition of power. Investor sentiment can fluctuate based on election-related news, polls, and debates. Positive or negative developments for a particular candidate or party can influence market psychology and investor behavior. Once the election results are known, the market may experience a rally or a correction based on investor expectations. With both the UK and Japan slipping into a recession last week, we are looking to see if the US will have a soft or hard landing in the second half of this year. Before we conclude, we would like to mention the risk-to-reward ratio. For example, if an investor expects to make a potential profit of $200 while risking a potential loss of $100, the risk to reward will be 2 to 1, meaning the potential reward is twice the size of the potential risk. Before you enter a trade, make sure you calculate your risk to reward ratio, be it 2 to 1, 3 to 1, or even 4 to 1. This will help you in your capital preservation. Another point to be noted is to understand asymmetric reward to risk, where the potential gain from an investment is far greater than the potential loss. In other words, the risk of taking a slight loss is worth the potential substantial profit. In order to avoid paralysis by overanalysis, we shall refrain from forecasting. The trend is your friend until the music ends. To all you guys who are new at trading, remember to paper trade before you invest. Have a great and outstanding week. Stay tuned to a new video next weekend. Happy trading.